Hello, everyone, and welcome to this edition of OBG Talks with me, Patrick Cook, Oxford Business Group's Managing Editor for the Middle East and Asia. I am delighted to be joined today by Gina Fyffe, who is the founder and CEO of Integra Petrochemicals. Integra is a global petrochemicals trading company headquartered in Singapore, and it has an annual turnover of approximately $1.5 billion. Now, one of the many interesting things about this company is actually one of the oldest petrochemical trading companies in the world, having been founded way back in 1989. So, Gina, thank you for joining me today.
Thank you very much for the invitation, Patrick. I'm looking forward to it.
Okay, great. Well, let's go into quite a hot topic then. One of the notable features of the past 2 years has been the growing prominence of environmental, social, and governance investing, ESG investing, and the adoption of ESG values. What are the major ESG considerations for a petrochemical trading company like Integra, both in terms of your direct operations, but also your engagement with shipping companies and other external parties?
Well, for us, our scope one is quite straightforward because we're not producers per se. Scope two, of course, is everything we use, everything we're involved in directly, whether that's electricity, company cars, if we had any, that type of thing. Scope three for a petrochemical trading company is really rather complicated, as it is for most petrochemical companies, because that's where we're looking at the provenance of our product and also the provenance of everything that we touch in the supply chain, whether that's inspection, where they go out on boats to take samples, or whether in fact that's the ships themselves, because there's a lot of activity from ship owners trying to reduce emissions as well. And I think that isn't necessarily given the full consideration or is as big a part of the thought process of the major petrochemical companies as perhaps is going to happen over the next couple of years when they realize what's going to happen. But for us, I mean, for example, if we have propylene or another petrochemical biogas, where we have to break it down, provide our carbon or CO2 equivalents, then it makes a big difference whether that cargo comes from China, comes from the US, comes from the Middle East, comes from Europe, because we rely on the cooperation of our suppliers and their awareness of ESG requirements and the measuring of CO2 equivalent. And that is a bit of a mixed bag at the moment. So in many cases, the way that we are trying to calculate this is based on the basis of the EPA numbers, which are more or less an average. But over time, that's not going to be good enough. And looking forward, we see that the European Union, for example, is looking at how they can safeguard and protect their industry as they try to get carbon neutral from perhaps other parts of the world where they're not as far advanced in these calculations and in the awareness. So there's lots of different things happening that make it a bit more complicated, I think, for everybody, and particularly from companies who are shipping. And for us, we have, as part of the group, we have ships, we use them a lot. We're ship owners in another part of our life. And we find that that's really, really difficult because what's happening is that ships, like the one behind, they're getting older. I know she looks beautiful and she looks almost new, but she's not. Most ships have a lifespan for use in the major petrochemical trades of 25 years. So those ships, if they're 16, 17, 18 years old, their lifespan is quickly coming to an end. And they need to be replaced. I mean, not specifically this one, but many ships, most of the ships in the market today are not new. And it's really difficult to decide what you're going to do if you want to buy or build a new ship, because you have to decide on what the fuel's going to be. and how you're going to produce that energy, and what are the requirements going to be for the next 25 years. So if we placed an order today for a new tanker or a new gas ship, we would be probably expecting to see that ship come out of the yard and into service in, if we were lucky, 4 years, maybe 5. We would have to decide now what is going to be the energy source and how we're going to power that ship, how we're going to keep the product controlled for the next 25 years after she comes out of the yard. And that is really difficult. So much so that we as a company and also other companies are increasing the price of second-hand ships, because we're buying second-hand ships to buy some more time to make those decisions and make the right decisions on what the energy source of the cargo of the ships is going to be going forward. Now, that's what I said at the beginning about people not necessarily having caught up with this yet. Because if you're not building a large number of ships to replace the aging fleet, then the fleet will get smaller. As the fleet gets smaller, there's more competition for ships because there are fewer that meet the requirements. That will put freight rates up. In addition, you've got product that's moving across big distances more and more. You know, the axis between Asia and the US, Europe and Asia. So a lot of the product, and going forward even more so, is not just wandering around the Mediterranean or around Northwest Europe. There is a significant deep sea portion. And that means that one ship is occupied for a long time. So if you look at what's called ton miles, and you look at a cargo that's coming from, let's say, Northeast Asia to the US Gulf, that's going to take 30 to 33 days, perhaps. That means that you can't do many voyages in a year. But if you're just going from Korea to China or Taiwan to Indonesia, then obviously those are a couple of days voyage. You can do many voyages in a month. But this is a problem that's waiting to happen. And I don't really think that it has been realized by the petrochemical majors, because the problem is that as a ship owner, you take a risk. You're building a ship. You tend not to be building ships against long-term contracts. You're building them based on your understanding of the market, because it's very difficult to get long-term contracts. But now, with all the uncertainty and with interest rates going up and commodity prices like steel being very expensive, ships are really expensive. And I mean, we've talked to people about this, you know, could we have a 5 or a 10-year contract to look at these shipbuilding problems and build and renew the fleets? And at the moment, that doesn't seem to be an option, because the petrochemical majors have the same problem as everybody else. They're not quite sure what's going to happen next. So I think this is going to come and it's going to bite us when we least expect it. And it will probably happen at a time when we can least afford high freights with high commodity prices and inflation.
And we're having this discussion ahead of the release of Oxford Business Group's report on innovation in the Gulf petrochemical industry. And as many of our readers and our viewers are well aware, petrochemicals forms a key part of the economic diversification plans in many of the GCC countries. So how do you see this ESG transition playing out in the Gulf petrochemicals industry, and what competitive advantages do Gulf petrochemical companies maybe have that would allow them to leverage some of these disruptive forces for their own advantage?
Well, I think the Middle East has a big advantage. They have a proximity advantage that sometimes, of course, in the past has been a disadvantage as well. That they're midway between Asia and the US and Northwest Europe. So that means that you can, if you're a company in Northwest Europe or in the US who wants to diversify their supply chain, you can add the Middle East into the mix because it's halfway there. It's halfway between Korea, China, the US. So it allows you to not have just-in-time delivery because you want to get that, from the company next door, but it allows you within a couple of weeks to have the product. And it adds to the diversity of supply sources. And also because the Middle East producers are trying very hard to think out of the box and be creative and be innovative. I believe that they are seeing the risk on the shipping because they haven't increased their storage a great deal either. They haven't increased their jetties, so their jetties get more occupied. And so for them, they have now the time to do something. And looking at the whole chain, as many of these companies are, I would expect that they will pick this up quite quickly. And also because of the way their decision making is made in many ways, it's easier to make a big financial decision than it perhaps is in some other companies, some other stock listed companies, is more difficult. I'm sure that many people would disagree with that, but they have different opportunities. And I would expect, and I hope that the Middle East will jump in and will take those opportunities and will look at fleets, look at transitional planning, and take advantage of the fact that other companies haven't yet managed to get there. And that will be a first for them. And once they're the early uptaker of these things, everybody else is kind of left a bit behind. Because once the yards are full, once you have the right number of ships, you don't normally keep building, because then freight rates collapse and you don't need any more ships. So I think for the early adopters, this is going to be an opportunity.
Well, thank you very much for sharing your insights today, and thank you everybody for watching.